Cool. Well, hello, everyone. Welcome back. We'll be diving into the future of the UK tech scene for this session, taking a bit of a forward look, and hopefully discussing where the UK might find its next 100 unicorns. So a bit ambitious, but that's the sort of theme of the day. So we're rolling with it. So I'm excited to be joined by Adam from AlbionVC, Niki from Pledge Ventures, and Katie from Outlier Ventures for this discussion. We'll be trying to cast our eyes forward and figure out which industries have the most potential to offer in the coming years, where we might find the founders of the future, and how we can create an atmosphere in which high-growth startups can really thrive in the UK. We'll also be talking about whether they're even looking for unicorns at all, but we'll get into that later. So just a quick reminder, as with the first panel, we'll be taking some audience questions at the end if you have them, so please do have a think about what you might want to put to our panellists at the end of the session. So with that, I'm going to kick things off by asking them each to introduce themselves briefly, to give us their sort of elevator pitches of who they are, who they work for, and what they're up to. So I'm going to start with you, Adam, and talk about Albion.
Sure. Hello, everyone. And I've just noticed how dirty my trainers are, so apologies.
Nobody look down.
My name's Adam. I'm a partner at AlbionVC. Albion's been around for almost 30 years now, so I have seen quite a few cycles over the time. We've grown to manage about $1 billion, and the vast majority of that is focused on early stage technology investing. By that, we really mean the majority of the stuff is seed and Series A, focused on the UK B2B software companies, but also have a kind of side fund which comes alongside that, which commercialises IP coming out of universities, specifically UCL, and that tends to be more on the deep tech side of things, so slightly earlier stage. But generally, sector agnostic, have invested and grown clusters in things like fintech, digital health, cyber, big data and AI. I personally look at a lot of climate tech investing, so where B2B software has a role to play as an enabler and accelerator to net zero. I guess what we really look for in terms of investing is companies, and specifically founders, with the vision, the ambition to grow kind of global category leaders, to be disruptors in markets, and look to lead initially and then follow on through rounds as far as we can.
Katie, you've got a bit of a unique perspective on this, both from being part of an accelerator and also the Web3 angle. So excited to hear a bit more about Outlier. And maybe you can also, we've had to abbreviate your title to just Accelerator Lead, but if you can tell us about your full title and what it actually means.
Yeah, absolutely. So I'm from Outlier Ventures, Accelerator Lead, but my area of expertise is actually real-world assets, which is actually around bringing traditional assets that can range anything from financial assets to more physical assets like art or real estate, and bringing them onto the blockchain for more efficient management and decentralized access. So I run an accelerator focused in that field. In terms of Outlier Ventures, we are a Web3 accelerator. We were founded in 2014, so had our 10-year anniversary last year, and we're one of the most active investors globally by volume in the Web3 space. And we run accelerators across different verticals of Web3 and supporting founders building in decentralized technology and blockchain. We have a portfolio of around over 320 companies now, and we've run around 40 plus programs, 40 cohorts over the last 10 years. And I would say in terms of where we fit, so in the sort of wider VC ecosystem, we very much focus on early stage companies, pre-seed, often we're the first institutional money, or the first backer of the startups that we work with, and we kind of position ourselves more as like a co-pilot, let's say, and part of our model is really providing a lot of human capital support as opposed to monetary capital, although we do invest smaller tickets ranging from 50 to 200k. US dollars, that is. We're London headquartered, but we invest globally. So great to be here and excited for the conversation.
Cool, fab, thank you. And we'll talk a bit more about the sort of human investment that you touched on later as well. And Niki, lastly, Pledge Ventures has a particularly unique way of working in that you partner with Founders Pledge. So love to hear more about that, and also repping the merch. So looking great.
Absolutely. Good morning. Lovely to be here. Thanks for having me. So as Amelia says, to understand Pledge Ventures, the organisation I'm a founder and partner at, you first have to understand a charity called Founders Pledge. And Founders Pledge helps a community of about 2,000 entrepreneurs to give their money away as effectively as possible after they've made it. And they provide them with a whole suite of resources to do that, from quantitative charity to research, advisory, educational programs, and a sort of range of other support and sort of infrastructure that they need to give effectively across borders and have the most impact possible with their philanthropy. Now, the challenge for Founders Pledge has always been, how do they support their own operations? Founders Pledge is a charity. They don't take a cut of any of the money that the members give. We don't charge anything. There's no costs, commissions at any stage on the charity side. So traditionally, we've gone out and we've fundraised each year to cover the charity's operations from independent philanthropists. However, a couple of years ago, sort of 2-3 years ago now, we had the idea of spinning out a venture fund. One of the most incredible assets that Founders Pledge has at its disposal is this community of entrepreneurs who have grown some of the most impressive businesses of the last sort of 10 years. So what Pledge Ventures is doing is investing back into the companies of those founders who've committed to philanthropy via Founders Pledge. We're going in at later stage. We're Series B and later founders, and we're investing using a rules-based approach. So we're only investing where rounds are 20 million or more, only where it's a Series B or later, and only where there's a top-tier VC participating in that round. And what that means is that we're more of a following model, and we're able to invest in a really kind of industry and geography agnostic way, knowing that there are other VCs in the round who've done really deep diligence, and we're able to partner with them and essentially copy their homework to a certain extent. We did our final close of the fund, of our first fund, in April of last year. We've made 21 pretty rapid investments since we did the first close of the fund. We're small tickets into a large number of later stage rounds, so it'll be about 60 or 70 portfolio companies within our first fund, which is 53 million. And so far, we've invested in everything from e-commerce in sub-Saharan Africa to AI in Silicon Valley, e-commerce marketplace in the UK, life sciences in the UK, aerospace in Germany. So it's a real range of different things in the portfolio, and we think quite an exciting opportunity to invest across the board in a bunch of different things.
Thank you. So we're going to talk about sectors, and you'll have sort of different areas that you're looking at, and as I've stated, a couple of sector agnostic. So quickly, for some context, last year there were 79 startups that reached unicorn valuation, which maybe sounds like a lot or not very much, but it's kind of nowhere near the dizzying heights of 2021, where there were more than 500 new unicorns, for context. Last year, to no one's surprise, 36 of the new unicorns were AI startups, which is about 45%. 16 were fintech and crypto, which is about 20%, and then the rest fall under cybersecurity, transportation tech, enterprise software, and a few other categories. But I'd love to hear from you guys where you think the next set of unicorns, specifically in the UK, are going to come from. Which sectors are you particularly looking at, and why do you think the UK is sort of uniquely positioned for those sectors to thrive in? Adam?
Big question up first. Okay. I am going to stick with one of the areas that I look at a lot within the climate tech world, and that is everything to do with energy and the energy transition. I think, the UK was the first country with a national grid, right? It was the first one to set up. And it's still one of the most complicated grid systems, even for a small country. Now we're going through an energy transition, which is basically turning how we generate and use energy on its head. It's a complete 180, going from a centralised system to a decentralised system. So there's a huge amount that needs to be done there. It's not just, and that's not just a problem in the UK. That is pretty much every Western country has the same issue when it's coming to grid setup. So if you can nail it in the UK, it goes everywhere. And we're talking about one of the biggest markets in the world. Energy transactions are almost twice that of fintech transactions. You're talking trillions. in terms of huge global potential. And it's a system that's been the same for 50 years, is ripe for disruption. I like areas that have been antiquated and haven't wanted to shift, but are kind of being pushed to shift. So that's a big area of focus for me. And there's you talk about AI, there's applications of AI across all of that, from the increase in build to how it's managed to how you transact. There are AI applications going through the whole chain. So that's my area.
Yeah, so obviously with Outlier Ventures, we are focused on blockchain. So I'll kind of address maybe a few areas that we're focusing on within that sphere. But I kind of want to look at this more from a perspective of not necessarily who's going to be a unicorn, but actually which industries and which areas I feel that we need most disruption and where an opportunity is from that perspective. So I think obviously one key area is what I've just mentioned, is the thing that I focus on, which is disrupting traditional industries with bringing assets onto the blockchain and helping to make them managed in a more decentralized manner, and opening up access to assets that may not have traditionally been available or accessible, let's say. I'm coming at this actually from an angle of my original career was in art. I used to be at Christie's as a specialist in Chinese antiques, and I got into this field because I sort of got a bit disillusioned with these very traditional industries and the kind of like making money available for the few and not for the many, and making art accessible for the few and not for the many. And I think that this is one area that we can really invest in to ensure that, you know, new technology and new infrastructures are being put in place that ensure that different types of people can interact with art in a digital manner, for example, or also in the financial sector, you know, disrupting kind of the way that assets are structured and managed, and kind of giving more access there. So I think that's one way, one area which I'm really excited about. And I think that we have so many traditional industries here in London which are ripe for disruption in that manner. Obviously, there's also AI. We are focused on AI, but looking at it more from the perspective of how blockchain infrastructure can help to make sure that AI stays under control of the many, rather than becoming too centralized and too owned by big tech, let's say. And so there are lots of like problems and issues with the development of AI that can also be managed through blockchain technology, making that infrastructure more decentralized. So this is something that we are spending a lot of time researching, and we're really excited to see how that develops. Yeah, maybe I'll leave it at those two, but there are so many more.
It's interesting thinking about AI in this context, because while we might not think, you know, I don't think any of us are sitting here and saying that the unicorns we're going to see this year are all going to be AI companies. Every single one of the companies that becomes a unicorn this year is likely to be using AI in some way. So it's going to be embedded in the business models of these companies in some way. And if we look at the unicorns that we had coming out of Europe last year, was it 56 that there were globally last year? Was that the number you gave at the start?
79.
Sorry, 79, sorry. Only 13 or 14 of those were in Europe. And of those, the big two success stories of last year were AI companies. So I think we can expect some of that to continue, but some of the industries that I'm most excited about are the industries that are really using AI well already. So if we think about life sciences, for instance, there have been huge advances in life sciences companies over the last couple of years using AI. So we have a portfolio company, for instance, that's using AI for drug discovery. And what they're doing is adapting and repurposing existing molecules or enhancing into existing molecules to treat rare diseases. And they're able to bring those to market far more rapidly than they would have been able to do, having to go through approval processes right from the start. And if we look at what's happening in life sciences in the UK, even just in the first month of this year, it's been really exciting. So in Europe, in January, we've seen 60% of the funding that went into life sciences last year go into life sciences this month already. And half of that, pretty much half of that, is in Europe, is in the UK, sorry. And while deal count is down, there have been a couple of sort of real mega rounds that have driven that. It's companies like Vediva Bio and Apollo Therapeutics. In the case of Vediva Bio, a 410 million Series A. So we are seeing some real kind of companies on a sort of impressive trajectory there, and I think we're going to see more of these this year. And I think the demand is going to, it's never going to go away for the companies that are tackling these problems that humans face. It's not like we're solving a problem that doesn't need to be solved through life sciences. I mean, it's absolutely essential for all of humankind, and it's particularly essential when we look at the sort of strain that some of our health systems are under, both in the West and elsewhere in the world as well. So I think life sciences in particular is going to be a really interesting area to watch over the next year. And there are other sort of industries as well that I think are using AI in really, really interesting ways. And we're going to see more and more AI-enabled companies springing up in different verticals as well.
Well, a couple of things. One, in terms of the AI, revolution that's undergoing, the other piece I love is the picks and shovel piece around AI, right? So future of compute, semiconductors, photonics, data centers, even all the pieces that you need to drive that revolution, and a big energy efficiency piece with data centers. But it's also interesting with what you were saying about the art world and democratizing, making it open to the many and not just the few. It's the same with what I'm looking at in terms of energy, right? You have these big energy companies historically that have captured most of the winnings of every transaction. And part of this process of decentralization also enables democratization of energy and opening up the energy markets to the small players, the small businesses, and not just funneling money down to big energy. So two seemingly completely unrelated sectors, both looking at the same thing.
Yeah, and actually maybe even adding on to that as well, another part of what we focus on is decentralized physical infrastructure, and part of that is looking at decentralized compute networks, which are a massive part of supporting the compute power which is needed to accelerate AI and kind of underpin all that. So again, just a nice synergy that there's lots of things that can intertwine here, I think.
Yeah, it's great that seemingly disparate industries, but also lots of overlap. Where are you looking for the founders of these companies that sound so wonderful, but where are you finding the founders of them? Niki, can I come to you first?
You can, and it's an interesting one because I think we talked a little bit when we were speaking in advance of this about universities. And we talked about some of the incredible sort of tech transfers and things that are spinning out of universities. And I think there's a couple of things that mean that those are really powerful places to, really powerful breeding grounds for new founders. And one of those is that they're a place where ideas are shared. So it allows us to build on the shoulders of the founders who've come before. It allows people to really take advantage of the learnings that other people have had in a way that in other parts of the industry we maybe don't do very well. However, I then started thinking about it and I thought, actually, I'm not sure that we're looking at any one place for the next generation of incredible founders. I think what we're looking for is smart, hungry, driven people who really want to make a change in the world. And some of those people will come through universities. Some of them will come through accelerators. Some of them will come from the world of business. Some of them will have been serial founders who've had a successful startup and have learned how to do that. Some of them will have been founders who've had a startup that's failed and they've learned what not to do next time. And if we focus too heavily on education when we're thinking about where the next generation of founders comes from, I think we miss the point around how important the drive, the ambition, and the absolute dogged determination is when it comes to being a founder. It's not an easy journey. It's something that a lot of people, go into, I think, thinking it's going to be a much smoother ride than it is, and find out quite quickly how tough that world can be. And it doesn't all come down to what you've learned. It doesn't all come down to education. Let's look at some of the most successful founders of the last few decades. Let's look at Richard Branson, Steve Jobs, Bill Gates. None of these founders went to university or college. So while we might be seeing some incredible founders coming out of universities at the moment and some incredible businesses, we've got to look for them everywhere. We've got to look for those people who are really just determined to disrupt, to be the next person who does the next amazing thing. And we are going to find those people in all kinds of pockets, and we need to be open to finding them wherever they are, rather than looking for them in specific places.
I should have come to you last because I want to come back to that.
Sorry.
And it was something that was touched on the panel this morning as well, of sort of having an ambitious mindset and I want to ask about how we can help that, but I also want to talk about accelerators and spinouts quickly before we get there. So I'm going to come to you, Katie, to talk a bit about accelerators.
Yeah, so obviously with an accelerator being kind of early stage and first money in, a big part of our offering and the way that we work with startups is actually offering our expertise and kind of giving as much support to these founders at a very early stage when they may just be just past an idea phase, let's say, and they still need a lot of input into the product and the business model and the marketing strategy. So we have like 40 plus experts who range in expertise and really like work on a bespoke level with these founders at that early stage. So totally agree with what Niki has said. It is for us mostly about finding founders who we believe are, have the right attitude, are hungry to succeed, and are collaborative as well. Like a big part of our investment committee process, and we do operate an investment committee like a more traditional venture capital firm. We go through rounds of having the founders come and pitch to our committees. A lot of that process is looking for founders that we think, can we work with this founder? Are they collaborative? Can we actually add value to them and kind of have this symbiotic relationship? Because at the end of the day, the more that they want to work with us, the more we can give to them and the more likely they are to succeed and then go out into the ecosystem and help build more of this technology in Web3 that we believe is something that the world needs and is going to be really important. I could also talk more about how we do sometimes work with some of the universities, and I do think that's an interesting way to find very intelligent young people who are looking to start their own companies. We do go and host talks at Oxford. There's a blockchain conference coming up in the next couple of weeks, and one of our research specialists is going out to host a session on blockchain and AI. Actually, the way I got into this was I used to work with one of our portfolio companies who was a spin out of the Cambridge Judge Business School. And so that is definitely a hub where we look, but it's more about having those applications come in and like really looking at the character of the founder and whether we can actually support them and make it a success.
And how do you think we can sort of nurture that attitude of ambition and drive and optimism, to go with the theme of the day, in these aspiring founders?
Yeah, so I don't know if this is the time when we want to talk about this unicorn concept.
We can get to it now. We can come.
But I think it maybe segues quite nicely. I think we kind of all discussed a little bit actually that this concept of chasing the next unicorn in some ways isn't always the most helpful way to build an inclusive, sustainable culture within venture capital, working with founders and having the right kind of attitude. So I think for us, it's more about providing this supportive ecosystem. And, at the end of the day, we support many founders and we want all of them to succeed. We don't just want to see one going and, raising tons of money, but potentially the others being left behind. We want to give equal support to everyone. That's really important to us. And what I'm seeing more and more is actually founders saying to me, you know what, Katie, I actually don't want support with my fundraising. I want support with my business model and getting my first revenue in, because I don't want to raise yet. I want to actually be self-sustainable before I actually have to go and get external investment. And I think that's a really healthy way of looking at it, rather than chasing the numbers of what's the valuation of my company, let me get to the next round, and I see Series A, Series B. It's not necessarily all about exit. It's about building a business that's going to make a difference to society and the way things are run.
Go for it, Niki.
There's an interesting phrase that Andrew Chen from Andreessen Horowitz used a few years ago, which was forever companies. And he argued that rather than trying to build the next unicorn, we should be trying to build the forever companies, the sustainable companies, the companies that will last and endure and really change something and make a difference. And maybe those companies will also be unicorns, but let the unicorn status be the reward for doing the job well and running a good business, rather than the thing that we chase in and of itself. It shouldn't all be down to that one sort of top line, bottom line, depending on how you want to think about it, metric. It really does need to be about the strength of the company that underlies it. And if we look at what happened in 2021, it was a lot more unicorns that were minted in 2021, but a bunch of those haven't raised again since. A bunch of those are no longer unicorns. So just sticking this kind of unicorn status on a company doesn't necessarily mean that the company is necessarily worth the amount of money that we've agreed to pay for it. And it doesn't necessarily mean that it's going to continue to sustain to actually make that impact in the world.
Yeah, I mean, to Niki's point, companies need to have underlying value, right? And every business, and it doesn't have to be tech businesses, comes down to a value proposition, right? And what value are you producing for your customer? That's how you get kind of traction. That's how you get revenue. I mean, the concept of a unicorn can be helpful just to set an ambition, right? And we're looking for ambitious founders. Now, just because it's not a unicorn, if it's an £800 million company, that's a great company. There aren't that many of those in this country and haven't been historically. And I think sometimes, again, looking historically at the UK, we've been accused of having a lack of ambition and being slightly kind of conservative, especially if you look at the US as being one of the, big things over the past 20, 30 years. I think that is changing. I think there's a cultural shift there that's driven by a lot of things. It's the ease with which you can start a business nowadays, right? You've got all the tools at your fingertip. You talk about universities, and we talked about this the other day, and the difference between the US and the UK and the focus almost of those universities. If you look at the top 10 universities in the world in terms of research, 4 of them are in the UK, 4 of them are in the US. But historically, the US has had a lot more businesses coming out of those and big businesses coming out of there. Now, that's been a cultural thing where the US has those universities have almost driven entrepreneurship as part of what everyone's doing. And a lot of the time, the UK has been slightly more focused on academia and research and publishing. You're seeing less of that, not less in terms of the academia, but most of those universities now have funds and tech transfer offices, and there's a cultural acceptance and drive to be entrepreneurs as a viable option, and more people want to do it. So, unicorn is a kind of, whatever, it's £1 billion. It can be helpful just to have that as an ambition, but, I mean, to Niki's point, there needs to be a fundamental value, and just because you get valued at $1 billion, mostly because of VC hype or hyped rounds, doesn't necessarily mean that the underlying business is sustainable and great. Mm-hmm. I also think there's a big emphasis on us in the VC community and kind of practicing what we preach in terms of founders and the ambitions. And the other big cultural difference historically has been we've been slightly more focused on minimizing downside risk rather than on upside potential, right? And Peter Thiel's one. I mean, they all talk about the most you can lose in the downside is what you invested. The most you can win in the upside is like unlimited. So if we're talking about ambitions and looking for ambitious founders and wanting them to do these great big things, we have to be backing them and prepared to do that as well.
Yeah. Can I add something on that? Yeah. I think as well, just when you think of that pressure of, if you're a VC, you have a responsibility to make sure that your founders are supported and have the ability to succeed in a way that's not putting so much pressure on them that they're just going to cave under that. I'm talking from like a mental health perspective here, really. And if we, from a venture capital perspective, are saying we just want unicorns, that's a huge amount of pressure. And it's probably going to put off a lot of people from considering being an entrepreneur because they don't want necessarily to have that expectation on them. And I think this is something that's really worth considering. How do we support founders and make sure that they feel comfortable to succeed? Being a founder is such a difficult thing. You have so many pressures on you just to make your business survive. You don't need that extra pressure of this expectation of, I need to become a however many multi-million-dollar company in the space of 5 years. So it's just something we should all think about as an industry, how we are presenting that, I think.
Yeah, which I think links nicely to something, Niki, you've touched on before of how we need to sort of be more comfortable with failure and more okay with the fact that startups can try and fail, and then those founders can go and try again, and that's okay, and they don't have to keep, sometimes you just have to move on, and that's okay, and maybe that's an attitude that is better adopted in the not to keep comparing to the US, but is better adopted there than it is here.
Yeah, it's absolutely better adopted in the US than it is here. We celebrate success and failure far less so than the US do. And there's a real opportunity for us here, because if we start doing those two things, the mindset shifts pretty quickly. To sort of go to a point that I think links into all of this and also links into what Adam was just saying, one of the things that we're skirting around a little bit here is a fundamental challenge with the VC model. So you have your LPs who've invested in your fund has invested in your company, and you expect as an LP to see returns. So we as the VCs in the middle are responsible for generating the sort of greatest possible returns for our LPs. So we are necessarily focusing on this sort of one number, the sort of the number, the top line number, far more so than we should be. And it's designed into this system. And it needs a fundamental mind shift at every point within this system, not just from the VCs, not just from the founders, but it needs the LPs as well. So we actually need LPs to start saying to us, okay, yeah, but I also want to see more female founders in your portfolio. I also want to see more founders from diverse backgrounds. So there's a bunch of other things that we should be focusing on at every different level, not just when we think about what should founders be focusing on, what should founders be thinking about, and what should they be delivering through their companies. This entire ecosystem works together. It's not one where we can change things in isolation. And this has to be a fundamental mindset shift if we're going to change the sort of trajectory of the companies that we're going to build in the future. And if we think about some of the challenges that our world is facing, we're going to need to do that. Some of the problems that we have, we can solve through government. Some of them we can solve through business. Some of them we can solve through philanthropy. But at the moment, there's a bunch of challenges which are going to be too big for any one of those things to solve alone, and for the existing sort of structures and mechanisms to address. So we are going to have to fundamentally change the way that we think about value creation and what we put value on. So value needs to become more than just how much revenue can I generate. It needs to become sort of what good do I do for the environment, or what social impact does this have in terms of reducing inequality or driving forward other social imperatives within our society. And that is something that is not going to change overnight, but it's something that everyone is going to have to be focused on if we're going to have a chance of making a shift here. And I think that is far bigger than just the mindset shift we need to start to celebrate failure, but we do need to celebrate failure if we're going to be able to try to take on some of these ambitious things that might actually make a difference to some of these problems. With greater risk comes greater reward, and that holds true here more so than almost anywhere else.
Yeah, absolutely. Great point. I'm going to steal from Alice in the last panel and ask, just to try and gauge how many people might be interested in asking questions. Okay, maybe we'll go to questions now then, because that's more than I expected. It's very equitable.
Oh. Thank you. Tim Flagg from UK AI. I'm really interested to get your perspective on whether the next unicorn is going to come from London or from the rest of the UK. And sort of, within that, should we be doubling down and just say, actually, you know what, the London and the South East, Oxford, Cambridge, that's where it's going to come from. Let's make that the best possible place. Or should we be thinking, and actually what are you doing if you are thinking that, about other cities and regions of the UK?
Niki,
I'm a northerner.
Yeah. No, I know. Do you want to take it then?
Look, if you want to play the odds, chances are it comes from London, just because we have the biggest cluster here, but I can't remember if it was Niki or Katie's point. Founders come from everywhere, right? They don't just come from universities. They don't, and more so now than ever. As I said, it's easier than ever to start a business, so you can literally start it from anywhere. There are great businesses all over the country, and I, not just because I'm flying the northern flag down here, but I go up to Edinburgh and Glasgow. We talk about great university scenes up there. Manchester, met a business from Leeds yesterday. Look, London is the hub and it's the cluster, and there's a great ecosystem down here. Chances are it comes from London, but it doesn't have to be.
Doesn't have to be, but it's easier for founders in London, partly because this is where most of the capital is. That's the other thing. Access to capital is one of the biggest challenges that a bunch of these founders face in the early stages. We have a sort of ecosystem that's set up to give people access to that in London. And if we're going to find, to go back to the topic of the panel, find the next 100 unicorns, we're going to need a lot of capital to build those companies. And where is that going to come from? And at the moment, unfortunately, most of that is sitting in the south, not distributed evenly around the country.
I would maybe just argue a little differently here as well. And to caveat, a little like Adam, a lot of our focus has been for our UK startups in the kind of south, just because of the way our infrastructure is. And actually, one of our most successful companies, Fetch AI, were from Cambridge, although they have actually moved out of that region now. However, I would say that within the realms of Web3 and the kind of companies that we deal with, it's actually very global. And although maybe a company might be headquartered in London, you may find that their team members are all across the globe. Maybe they have developers in Asia or India, for example, or even, they could span, I've worked with teams where one person's in London, one person's in San Francisco, one person's in Singapore, another person's in India. And actually, that can be a really good way of integrating diversity of thought and perspective into building a business. So I don't think we necessarily have to think just within the UK and just within regional areas. Maybe just another aspect to consider.
I would love to hear your view on how important a founder mindset when it comes to deciding whether you need to invest in that particular venture or not.
I guess maybe first of all, just to say on a daily basis when I meet with founders, I'm often very humbled, and I would never think that I would know more than them actually about their area of expertise. I would feel that I just play a supporting role in that, in giving kind of complementary advice, let's say. So when we as a company are looking to invest in founders, I think, I think it weighs quite heavily, like what is the rapport between us and that founder. And actually, yes, having had a background as a previous founder does mean that you've probably already had to kind of go through a lot of these processes and learn from mistakes and also be humbled by that. So I would say it's just a case of, on both sides, having some sort of complementary relationship where we recognize the deep expertise of you as a founder, and can we kind of add to that from a complementary perspective. I would argue that, we should be actually having founder experience previously and be able to look at it from a founder perspective as well as just from an investor perspective.
I think that's common now, right? I joined Albion almost 12 years ago, and I joined from a banking background. I did 5 years of investment banking. It was great. And back then, VC was almost exclusively banking and consulting backgrounds and things like that. The UK VC scene has changed dramatically even in those 12 years, and including one of the big things is most VCs nowadays have ex-founders as investors or operating partners. And it all comes down to diversity of thought again. And that can be in the companies that you invest in, but also within your own company. Diversity of thought is like the most helpful thing.
I think it's also important to remember that it's not just big VCs that are out there as options for early stage founders to raise from. Angel investors play a huge part in enabling early stage founders to sort of take those first steps. And an awful lot of the angel investors who are prolific at the moment are ex-founders. We also are seeing sort of more and more sort of interesting instruments coming through from some of the banks. So SVB, for instance, has a bunch of interesting debt options for early stage founders. So it's not just about, and I agree, we absolutely are seeing a sort of change in the makeup of most VCs, whether that's venture partners or operating partners or exited founders who have moved on to that as their next gig. So it really is something that's shifting and changing quite meaningfully.
Yeah, I think that's a great point to add. Also, lots of grants and things like that. And I'm sure VCs would be the first to say they're not always the right option. Great option, but not the right option.
If you can take on non-dilutive capital, great.
Free money.
I think very quickly we'll do one more over here.
I guess if you think about the biggest innovation and value creator of our time, you would probably say the internet, or I would. But that was never a unicorn, never would be. It created lots of value but it didn't capture any value. It's a public good in a way. VC now, like how do we get VC money into creating public goods that create lots of value but might not capture it? Is VC the right model for that? Should it be public money for public goods, even though there is no money? You guys talk about creating a lot of value, but the biggest things of value creators might not be profitable or capture revenue. I just wonder what you think about that, about LPs and their mandates, I guess.
I think there are a few different ways of thinking about this. First of all, I agree. The way that we kind of attribute value at the moment is absolutely not helpful, but nor are many of the things that we use in our wider ecosystem. So let's use GDP, for instance, as an example. That measure really doesn't capture all of the benefit, all of the value that we create in our society. It's exclusively monetary. And it really doesn't capture the economics. It's about the system as a whole, not just about the money at the end of the day. So first of all, absolutely agree that it's somewhat broken. I think this is why sort of different models are really important and really interesting, and we're going to see a bunch of these sort of organisations that sit at the intersection of profit and purpose start to spring up over the next few years. We're going to see a change in governance of what have previously been sort of for-profit companies. Let's take Patagonia as a really interesting example. So Patagonia and now, so they have two different classes of share essentially. So the value accrues to a trust, which then uses that, sort of donates that back into causes that align with the business's sort of purpose and mission and values. And then they also have an organisation which is set up to make decisions on behalf of the business to align it with its values. Now, that is a pretty extreme and pretty radical model in 2025, but I don't think it's going to be in 5 years' time or in 10 years' time. With Pledge Ventures, the way that we set it up is so that 85% of the carried interest, the vast majority, goes back into Founders Pledge as the charity. It's a meaningful difference in terms of how the wealth generated through that charity is then deployed and used. And when we set it up with Founders Pledge, the charity, as the largest shareholder on the cap table of the vehicle at the top of the fund. And when we did that, we thought, okay, great, we'll go and we'll look around in the market and we'll see who else has done this first and we'll borrow their blueprint, basically. And no one else had done it. That doesn't exist. In Europe, there isn't another non-profit owned for-profit venture fund. It just, it's not a thing. It's complicated. You're sitting at the intersection of the Charity Commission and the FCA, and that isn't a place that many people want to be. But it's a place that more and more people are going to have to get comfortable with sitting. And I take great heart from the fact that I've had 3 conversations booked in this week, which are other people saying, we want to do something weird and wonky too. We want to push the bounds of what's possible through VC or through a traditional company, or actually I want to think about how we can change this entirely and do it through a different structure. And it's really heartening to hear those conversations start to happen. They're happening more and more frequently. And I think as we all sort of shift this mindset and start to realise that we've got one planet, and bits of it aren't doing too well. We're going to need to do something to seriously change that if we want to drive things forward, and to think about that as the value that we want to create in the future rather than monetary value, I think is going to have a sort of meaningful impact on the types of companies and the types of governance structures that we see over the next few years. Now, the policymaker panel probably have quite a lot to say about this, but I think we need a lot from government on this. Because at the moment, we've made this sort of environment in the UK where it is relatively straightforward to innovate in the tech world. It's really not straightforward to innovate as a non-profit, for good reasons that are designed to protect them, but it's a thing that is going to have to change. We're going to need to change the boundaries of what we can and can't do with sort of purpose-driven companies if we're going to move things forward. Sorry, I went a little bit off topic there, but I hope that sort of somewhat answered the question.
But there's been enough wealth created over the past 20, 30, 40 years to think that you can put those new models in place, right? There's enough money out there to be able to do it.
Yeah, there absolutely is, but also getting people to decide that they're going to, take a hit on their returns. That's not a thing that many people want to do, regardless of how wealthy they're feeling. And actually, interestingly, in 2021, that was very much more so the case than it is now in 2025. Even people who've got kind of $8, $9, $10 bank balances are feeling poorer now than they were, and are therefore much less willing to put money into things that are less traditional.
Yeah.
Not ending on the most optimistic of notes, but maybe going back to the idea of more weird and wonky ideas kind of need to come through, and people need to be okay with maybe taking a hit. Cool. Well, thank you so much to our panellists. Can I have a round of applause for them, please?